Well, good afternoon, everybody. I hope you're all well and had a fantastic weekend over Easter. If you can just let me know you can hear and see me okay. Morning, Ross. Good day, Wayne. All is good in my end. Hey, Shane. Good day to you. And yes, of course, we had a clock change in some of the eastern states, which has just thrown everybody into a little bit of turmoil as usual. Every state seems to do something very different, which is a bit strange. Hey, Jerry, how are you? Good to see you here. Okay, good to see, good to see you, Gary. Okay, let's put up this disclaimer risk warning. Obviously, these are the opinions of myself and shouldn't be taken as representative of Go Markets. And of course, it is worth reiterating that as we are looking at live markets, then anything that you see or hear should be taken for as educational purposes only. We've got some couple of great lessons to share this morning. Not as direct advice to take trading action. We will have our charts of the day, of course, going forward, and although it's going to be slightly more difficult on FX, but we'll have a look at what's cooking in a moment. And as I said, I've got some good lessons, one good and one, or both good, one that went well and one not that didn't. So let's look at what's happening across the news to date. Of course, we've got Wall Street continuing the move higher since last week on good economic data. We had a storming jobs report out. The non-farm payrolls came in very strongly on Friday morning, which helped quite a number of asset classes that were open, but obviously the stock markets weren't. We did have the US move higher last night again. They were open yesterday, and we've got some bond yield stability, which is helping things, of course. Now, some very interesting action this morning. US futures have turned slightly negative as Asian markets have looked to respond to that positive move in the market overseas, and initially appeared to do so, but trading's mixed at this stage, and we'll have a look at those in a moment. ASX is probably outperforming a little bit, but the Kospi and the Nikkei are both down. US dollar index is trading back down to a key level with that equity strength. There is some technical recovery in precious metals, but you know my feeling about those. So still in a long-term downtrend. Chinese services PMI data is already out this morning. Of course, this side of the planet, we're waiting for the RBA to do its thing, and it's not going to be an interest rate move, but we may hear some comment in the RBA statement, providing it's sort of stressing economic recovery and, of course, a happiness or a general okayness with where the AUD is trading at the moment. Then there shouldn't be a lot of movement, but you never know. All it takes is the odd word, and that can send markets into a little bit of a state. Later on, we've got very little coming out of the US tonight, but we've got Eurozone employment numbers. Let's just have a quick flick through at a couple of those things we've just talked about. Let's have a look at the futures contract first. You can see there that, and we'll have a look at the charts in a moment, you can see all of the US indices have turned negative, and they were all positive earlier on in the session. And that's just dampened down some enthusiasm in Asia, perhaps. Again, we've seen sort of moves in the currencies. It looked as at one stage as though the yen was about to capitulate, and AUD and New Zealand dollar were looking very strong, but that hasn't happened. And so instead, we've got a little bit of strength coming into the euro. Sorry, a little bit of strength coming into the USD, but we'll have a look at the moment at those in a moment. With that, well, we are interestingly seeing gold and silver higher, and crude oil holding its own above sort of $60 on the Brent contract. A couple of other things of note. You'll see the 10-year note is higher. That means the bond yields are lower. That's helping things along. And of course, copper's having a little bit of a shaky day after a strong session yesterday. And that's just dampening resources enthusiasms a little bit. Good afternoon, Rachel. Hope you're well. So let's have a look at some charts. And we'll start with the US 500 daily. And there you can see record highs. Yet again, we talked about this being a potential. Last week we said there's two potential scenarios. Either with earnings season starting next week, we're either going to remain within a range, or we're going to pop up to the next level and find a new range. And I think we could be up to 4,100 on that. But certainly that jobs report on Friday has buoyed markets on what was already a strong session on Thursday, as you can see there. Let's just quickly look at the Nasdaq, which has outperformed over the last couple of weeks, although not at record highs. They obviously, from that correction, had a way to go, but you can see the strength in the Nasdaq over a really quite significant strength over the last 4 trading days, up in excess of 5%. We're now at another key level, which is just playing with at the moment around that 135,590 on the futures contract. Wouldn't be surprised to see it test all-time highs if we continue with this vibe. But of course, there is that uncertainty relating to earnings next week, and that could just limit the upside on some of these contracts. Now, ASX 200's a bit odd. Now, remember, this is a futures contract, okay? So that's why we're seeing this big red candle. We started off, we're in a pretty good place at the start of Asian trading on the futures contract, simply because of what had happened over the last few days. Looked as though it was going to push us out of this range that we've seemed to have been in forever, but in reality is since the beginning of the year. So we've been in this trading range of around about 2%. Looked as though we're going to push high, but of course we've fallen back down into that, back to that key level. We look at the 15-minute chart, you can see what happened. A really strong open in Asia, popped down, and then since then it's been a bit choppy, and that might be partly due to that Chinese PMI data that came out, partly due to the fact that we've got an RBA decision and statement in a couple of hours. Look at the economic calendar. You can see there that PMI, that services PMI number came out of China much stronger than expected. And there's that RBA statement in a little less than 2 hours. These US numbers aren't particularly important in general terms to the market. But if we do get a very positive JOLTS number, which essentially looks at the job openings, which is seen as possibly a precursor to employment, then we may get a market response to that. But would suggest that perhaps later in the week is going to be more interesting from a data point of view, with the exception of this number, with the exception of this statement that the RBA are going to make in a little while. US dollar index, we said that this had dropped down. You can see it's dropped down to that 92.50 level, which we've referenced before. That line's probably not quite in the right place. That's a better line. You can see it's tested that and back to where the 200 MA is on this, and that's really a reflection of equity market strength. Remember, there's been that inverse relationship between USD and equities for a while. It was broken for a little bit when those bond yields were moving higher, as you can see, and general sort of weakness in the yen, particularly, and the euro with the increase in COVID incidents and lockdowns, etc. But appears to be back with that relationship intact. If we look at precious metals, we'll start with silver first. There's a test last week of that 200 MA, so we've got some bounce. We'd expected a better result yesterday without US dollar weakness. So we're trading around neutral over the last 3 days, around that key 25 level. So nothing startling going on with with silver. And if we bring a gold chart on here, you can see not a dissimilar picture. Again, yesterday was very flat, but we've just had simply another bounce off that key level at 1675. So we're about $50 or $60 over that. We are positive today, but you can see that there's that key level at 1750. Now, what has benefited? If precious metals haven't benefited, well, the answer is quite simple. We just have to look at cryptos. There we go. There's Ethereum. We talked about that last week, potentially buying on the dip, waiting until they move over that pivot high, and we're up nearly 1,000 on that. Bitcoin, not quite as enthusiastic. So Bitcoin looks as though it may have maybe just stuck for the moment. So there's money going into the less popular cryptos, perhaps. Okay, let's have a look at the currency markets. We'll start with the Euro USD. I thought I'd just put a 15-minute chart on just to show you what had happened since Asian Open. So we had strength in the euro, you can see yesterday, and we had a continuation of that in Asia. And then, but over the last hour or so, we just had a pullback, slight strength coming in again. And let's put this into context on a daily chart. So it looks as though we've got a reversal intact. Almost looks like a reverse head and shoulders. There's a shoulder, there's a head, there's a shoulder. We could have got in around about this level here on the break of that neckline. But the two things would stop that. First of all, the proximity of that 200 MA, which is only really 20 pips away. And also there's quite a bit of previous price action around the same level. So we're looking at 118.40, a break of that to suggest that this might be worth a long trade. And you can see that on the hourly chart. But we've got a nice line in the sand there. But I'd be actually pushing that a little higher than there. Be very aggressive to get in at that stage. So it's that other line there, 118.35 plus some to prove it's making a breakout. Now, if we look at US yen, the opposite is the case here. We can see that yen weakness again, despite the fact that it's pulled back down to this level at 110.32. That could be interesting. Just to put this on, I think this was on a weekly chart. You can just take it right back. So you can see we put this downwards trend channel on there, which it tested through to the upside last week on the weekly chart. But so a little pullback, not surprisingly, because we always get these, as you can see there. Maybe some. If we just look at this in terms of where it's at now, the safer trade would be a 110.99, but there's 60 pips in between now and then. So if we look at this as a potential breakout trade that's happening right now, then we've got about 22 pips to the first pause level, 24 pips maybe. That could be interesting. But obviously the US yen doesn't move a lot of pips compared to some of the other currencies. But that's interesting nevertheless. If we look at the Aussie US, then you can see the 30-minute chart has really looked quite miserable, and we were in this. I entered the trade at this point here on a break of that, and with a stop at this point, so we just chopped it off. But now we're looking like almost a double top on that on the 30-minute chart, but really that isn't reflected on the daily. So you'd be going against the daily trend, but there could be a move back down if we do get that continued weakness, and it much may depend on what the RBA say. But there's a line there at 35.93, which is around about 50 pips to the downside that looks interesting. So that's certainly worth keeping an eye on. We look at the Kiwi yen on a shorter time frame as well. Much the same picture, in that we've had a sharp move upwards towards this resistance at around about 78 cents, and we've just simply pulled back. Put this on a line chart, you can see it better. We simply pulled back to the 77.81. We've tested that already and rejecting that, looks like. So really quite a choppy session again there. GB pound, Japanese yen for sure, Ross. Again, we'll start with the daily chart. You can see how strong this looks, but one thing that is noteworthy is the smaller candle bodies lengthening wicks. Might just suggest momentum's running out a little bit on this trade. So if we put it on the 30-minute chart, this actually looks the best of the bunch. So be looking for a potential long trade if we get a close above that 153.35. And let's look at the euro yen as well. Where are we at? There we go, euro yen. And this is our, if we just put it on a daily chart, you can see there's that critical line at 130.38. Take it back down to a 30-minute chart. You can see the close proximity of that. And so that's only 14 pips away. So this is our chart of the day, the euro yen on the 30-minute chart, and a break of that key level we can see on the daily. It's not that far away on the hourly, and likewise with the 30-minute, of course. So patience is required for this one, ladies and gents, but it looks as though it's shaping up nicely for a move higher. Now, let's look at some stocks, because this is where the major action has been, obviously, this morning. Let's just pop some live ASX data up. Very choppy morning, but choppy in a positive sort of way. And there's a couple of things we want to do. I want to show you here. There we go. Okay, so we're up nearly 1% at this stage. So we look as though we've got a sort of bottom today of around about that 6,880 mark, and moving higher to test those highs we hit probably about an hour and a half ago, and really a very broad-based rally. You can see there 152 to 35 advances versus decliners, so very strong across the board. Very few stocks looking shaky. A couple of the healthcare stocks, resources are underperforming the market. We'll just have a look at these in some more detail. So banking stocks aren't filling the world full of happy joy feelings, 0.6% up. You can see BHP doing better, just over 1% higher. There's the Bank of Queensland again, underperforming the market a little bit. CBA likewise again. So not, although there's some money coming into banking stocks, it's the other sectors that are outperforming. We want to see some big performers. We need look no further than previous favorites. There's Afterpay, up over 8%. And if we look at Xero, which has been our chart of the day for twice over the last couple of weeks, you can see that's up nearly 2.5%. Not sure what WiseTech do, but we'll have to have a look at that chart. And obviously there's Zip up 7%. Our travel stocks are doing relatively well at this stage. Now remember, we are playing catch up a little bit because we weren't open yesterday. Let's just have a quick scan of Qantas, because we are going to have a look at this chart. There's Qantas up nearly 2.5%. Webjet up around about similar sort of enthusiasm, with about 3% higher, and Flight Centre up around about 2.6%. So there's a definite pattern here, or a definite picture, that those travel stocks, those stocks which are related to business, are all doing well relating to spending. This is where the risk may come with that RBA statement. And so certainly with those stocks involved in the financial sector, maybe the Afterpay and the Zip may get impacted a little bit, and obviously banks as well may get influenced to some degree. But right across the board, I did mention a couple of weaknesses. There's FPH in the healthcare sector. Sonic are underperforming, so healthcare is not doing particularly well today. ResMed, there's Ramsey down, there's ResMed down, so healthcare are the weaker stocks today. But outside of that, it's difficult to see anything that's really doing very badly. So let's just sort of have a look at this. Now, I don't normally do this, but this was the lesson that I wanted to reference this on Thursday. Okay. So I don't normally show trades that are open in this account, but I wanted to show you this because it followed through on what we were talking about before, and it's all about zero. It's all about trade levels, and we talked accumulation strategies on the seem to be missing one there. No, we're not. We talked about accumulation strategy. You see there's 4 trades here in zero. Okay, so we've sort of done these at technically significant levels. Now, we may have been caught a little bit on this one today, perhaps a little bit enthusiastic in getting into this. As you can see, it's really sort of flatlined since entry. And there's 2 reasons why I wanted to show you this. First of all, you can obviously see the impact of moving into this. There's 0, there's 0, there's 0, and the last one we entered is actually to the downside a little bit at $300 down. But in reality, that's about $1 down from where we opened. We got caught a little bit on this candle here. Looked as though it was going to rocket again, but then a little bit of short-term profit taken on this. So we'll see where we're at later in the session. Now, there's 2 reasons I wanted to pop this in front of you, not only to show you that, but also to give you an insight into the decision making that I'll make on these positions now. Now, the exposure is really quite significant to this. Okay, so the exposure is around about $174,000 worth of zero. Okay, if we multiply the current price by the number of positions on, which is 1,300. Okay, so that really is quite a lot of exposure, and you can see obviously that this figure here is made up mostly of zero. And there's the one that's lagging a little bit. Okay, so the other factor in this is this factor here. That margin level is a little too tight for my liking, and so it makes sense perhaps, even though technically it could get stronger. The fact that it's had that price action today just says maybe it's time to take risk off the table. So after the RBA statement, we'll look at what the move is here, and we might take half off the table simply because of this here, and to go back, these futures turning negative. Okay, so the large exposure, the futures turning negative, and the fact that it isn't actually changing the world today, despite that higher open. So the rule that's in place is if it moves below open after the RBA, if it's below open in price after the RBA statement and these futures are still negative, then we're going to reduce the position. We did talk a little bit about reduction strategies on last week's Inner Circle. If you missed last week's Inner Circle and want the recording from it, then drop me a line, okay, if you missed that. Okay, so I thought that was so the 2 things I wanted to put in front of you today were this accumulation trade, because we did promise we'd look for one and follow through on it, but also wanted to talk a little bit about trade management once you're in an accumulated position. Now, if it does close higher than open, and it's pretty close, it's pretty neutral at this stage, and the RBA statement does no damage to market, we may not close 2 positions out. We may close the initial one out just to sort of take something off the table. You're welcome, Wayne. I'm glad it's been useful just to sort of make it real and put it into context, because that's, as I said, I don't normally sort of put up trades that are live at any stage, but I thought it was well worth doing that because it was a follow through on the learning that we covered in last Wednesday's session. Let's have a look at a few others. We like Qantas a lot. We see there was a small Qantas position there as well. Based on this bounce, it was on this candle here, so it's just taken a little bit of time to start to move, but this looks strong. This will be the strongest close really since that bounce off the 50 MA It's only a small position that's in this, so again, this could be one to accumulate into. So it could be that if we see this candle in the top third, then again, we could use exactly the same strategy. Now we've got confirmation not only of that bounce, which was an engulfing bullish candle off that, but we've now got, if this closes in the top third, looks or towards the top of the candle, it looks as though it's on its way up to 550. And just to put that into context, although that might not seem much in terms of dollars and cents, it is actually 4.6%. So it's a nice move back up to that. Nice move back up to there. And again, if you were accumulating into this, you've got two choices. You either take profit at this level, or you see if there's, or you tighten the stop up underneath it and then see if it subsequently goes higher once again. So let's just have a look at Webjet. Oh, sorry, Qantas are our chart of the day today. Here's Webjet. They haven't quite cooked in terms of a bounce yet, even though they're outperforming today, and it is undoubtedly a nice bounce. I'd like to see an engulfing candle covering these two. Just put this on a line chart, you'll see that really that's the level to get interested in, about 560. Or for more conservative entry would be that level there, around about 571. So there's one to watch. Two, Wesfarmers. Again, we've been looking at this. We had a breakout trade there, which I think we covered in the first session last week. Looked very strong on that. A retracement down to this level, but since then we moved up. But not a compelling candle here. In that it's close to its bottom, but we had two candles which looked as though they could reverse at the end of last week. So the fact that this is positive is good, but possibly limited upside on Wesfarmers. So this is what makes it unattractive. So possibly around about just over $1.10 on that. So just over 2%. Would make that less attractive. Or we didn't have a look at Zip. Is Zip much like not that dissimilar to Webjet in that that would be the key level there. Now you could justifiably enter this on a bounce off that 200 MA, but just bear in mind that about 50 cents higher which is still 5% on this particular stock, is this next key level at around about that, yeah, as I said, around about that 875 level. So again, you've got a choice there to make in terms of whether you take profit or see if it's got enough to break through. GNC, GNC on here. GrainCorp, I think you mentioned this last week, Ross, on this candle here, looked very positive. And of course, it's continued its merry way up. Actually, Thursday's candle was that, wasn't it? It was the doji type candle. Excuse me. But a very strong session. Just to put this into context again, let's pop it on a monthly chart. So quite a way to get, not very much to stop it in terms of, there's the next level of interest around about 723. So we've got around a big chunk of percentage now on that. It's massive. So potential 30% uprise. That's a nice chart. I quite like that one actually. I'm just going to remove some of these objects before we get out of control. There we go. So good call on that, Ross. ABC. So Adelaide Brighton, I think they're a building company, aren't they? Yeah, that's a nice move as well. Just let it cook in terms. There we go. So if we pop this on a chart, you can see that was a bit of an isolated high there back in December. But this level here was the more significant that we got a break of last week. So this would have been the aggressive entry on this candle here. Could have certainly got in on that closing high above there, but continues momentum there. Just that candle just is a little shaky again. Let's put context on this. So really this point here is quite important. If we go back to this level here, this is why it's sometimes important just to get that long-term perspective. So that was early December 2019 with a closing high in the month of that. We put that on a daily chart and you can see why this level might be just a little bit interesting from a technical point of view. But certainly if we get a break, good to see you here, Keith, too. Thanks, mate. That just could be the thing that that sort of makes us a little cautious. There's Afterpay. We put that on already. Wanted to have a look at the banks as well. So if we look at the mainstream banks, if we look at ANZ, not a compelling reason to take action as yet. I think the banks are well worth being patient with. So there's ANZ. Let's look at Macquarie, which again we talked about last week, but has really failed to capture any market enthusiasm. But this move, so this was the quite easily to get caught on this candle here. Actually doing better today, and you can see since Asian Open looks as though it's starting to creep higher again. So just well worth keeping an eye on this. If we get a close above that sort of 153.50, then we've got something sort of going on there as well. CUV. Pharmaceutical company, if that had a big jump and the rest didn't, it probably means that they've announced something that's interesting. So a nice big jump up, but you can see technically, so I would suggest that there is something that's going on with CUV from a pharmaceutical point of view, but you can see there's a previous high close we hit mid-March. So it actually tested that in the smallest trend, but actually ducked down below it. So patience with this one as well, possibly, is worth bearing in mind. The retail sector has some distance to make up after that pullback we had last week. You can see JB Hi-Fi, so we're going to hold off on retail for right now. Kogan, which is another. Now you might be tempted by this little sort of maneuver here, which looks as though it could be trying to find a bottom, but we've sort of been here before when we did this. So we probably want a little more buy-in to come into this, to be frank, although it'd be a very aggressive trade to get in unless it broke $13, and then you would probably have an initial profit target of $1 up, which is again significant for a stock of this price. LYC, certainly. Let's pop LYC on. We've been tracking this as well, and over the last sort of few weeks since that pullback, or a couple of weeks since that pullback, and we said last week that really that 636 level was the one of interest, and you can see we're just edging up to that. We've actually tested that in trading this morning, but even up to that next high, which created this pipe formation here, we are 4.5% or 4.3%. Okay, quick look around the US. Let's look at the airlines in the US, looking interesting once again. This is Southwest Airlines. There's the key level on Southwest. It's tested that a few times on the last in the last few weeks, really since hit that sort of beginning of March. So right through March, it's been testing that level. Looks as though we've got these higher lows here, which sort of suggests it's going to have another pop at 62 bucks. Again, patience would be important. Chart of the day for the US is PayPal. You can see this looks as though it's shaping up. We certainly had a reversal from that bottom, based really, if we just put this on a line chart, this was essentially a support that it honored. You can see all the action around here and here and here. Now the price is above the 10, the 20, and the 50. So we're waiting for a break of 255 on PayPal. You can certainly have a look at Zoom. There's Zoom, which is just frustrating as heck. We've got a very nice support in place. You can just sort of see this clearly on a line chart again. So very nice support in place around about that 312 level, which we've bounced off. Could be a move up to that 200 MA in the first instance. Joshua, TSM. That's an interesting one. Let's just flick it to a daily chart. That's a very interesting move, Josh. So technically, we've got a really nice move, really nice sort of breakout trade. Once it broke that 120 mark, interesting price action yesterday in that it sort of opened significantly higher and then made its way back down to the close price of the previous day. So this next move could be important. We may see it trek down to retest this level here, to retest that breakout before it pushes up, because that certainly isn't an enthusiastic candle there. So you may have to be patient with this one if you're in it already, but you've got a nice stop level there underneath that key level of 120.50, and probably about 40% at least of the times when there's a breakout trade, you get this sort of retest of that level. But that is quite a significant candle to the downside. It's just out of interest, let's look at the 30-minute chart from yesterday. So you can see that really strong opening level, certainly off the lows, and once we got past those first 3 hours, we got some buying back into it again. So it doesn't suggest as though there's a lot of selling pressure there. So we may, so that the next session on that is going to be interesting. Okay. And Apple. Right, we talked about Apple. We talked about 125. We've hit 125, okay? So again, this is the level that we liked last week. Okay, so around about that 124.86, we said wait until 125. Conservative entry would be this more established level at 126.75. So watch that. If PayPal's too pricey, then Apple could be one to have a look at. We like this as a pattern. You can see it's moved up above the 10, the 20, and the 50 MA. Once we get a cross of these two, which we'll get if it breaks there, then we'll be in that could precipitate some more buying pressure. And certainly tech looks as though it's got more in it, perhaps, than some of the others. Any last ones you want me to check in on? Just have a quick look. Hang on a second, let me try and find out. I'm sure I've got it on here. News Corp. News Corp are interesting. You can see how this has really just sort of continued to move high. Every time it's broken a pivot high, it's gone again. So if we put it back on a candle, this could be just a retracement. You've got buying in that straight away. Certainly, if you're in this already, possibly makes sense to have a stop around about that, just below that $31 level on that 20 EMA would make sense. To the upside, again, you'll be looking at that 32.40 level just to see if there's any momentum to push it through. But in reality, with this exception of this one candle, we have closed in a range between this 31 and 32.40 really since the beginning of March. So yeah, that's it could suggest that this sideways trend could be in place for a little while. ALL. ALL is shaping up very nicely. It'd be interesting to see what happens to the leisure stocks over, because you would imagine that if the travel stocks are doing up, it's with an optimism that we may see some opening up soon. And of course, anything to do with services and leisure are going to benefit significantly from that as a side effect. So previous resistance, or you probably put around about this level here. We did have a little poke above it previously. So this $35 looks important. This will represent a high close since November 19. Could be a couple of dollars upside on that, maybe. So from this high close, it's about 4%. So you wouldn't get greedy on that, but nevertheless, it does look interesting. China 50. Yeah, we should have a look at the China 50. Just obviously we had these strong PMI numbers coming in, which the market has not responded to particularly well at all today. Looking a little weak. China 50, you would say, okay, there's two ways to trade this. Okay, certainly there's a key level there at 17770, which I think, again, we referenced last week. See how much resistance there was maybe 3 weeks ago there. You can see the 200 MA on the bottom. So now essentially we're trading in a range. Now let's just take this back. I'm just interested. So let's put some fib lines on this from the possibly from the bottom here up to the top there. And not particularly compelling. What about from the bottom there? No. Well, you could argue that if we took it from May's low from last year, actually, if we're going to do that, we might as well take it all the way back. There we go. So it really doesn't fit, and I'm sort of against trying to make it fit, if you know what I mean. That was the last obvious trend reversal, with the exception of this one here. Okay, so you could argue there was the low of that trend reversal before it started moving up into uptrend, and so arguably, if we bring it up now, you can see how that 61.8 fib is being ordered, but it just feels as though we're trying to force it a little bit, whereas we've got some nice clear lines anyway. So let's just rip that fib off. This didn't happen. Sorry about that. Let's try that again. It's an object. I keep on forgetting that's not an indicator, it's an object. Let's delete that. There we go. So really, you've got two clear lines of the sun. Now, there's two things that could happen. It could bounce off this and move back down to here, in which case you've got a nice engulfing candle there. So it takes out those two. So if we get a continuation of that, you can see on the hourly chart, looking quite weak. Probably pitch a key level in terms of the hourly chart at that 17447. Let's just make this white to differentiate as it being the shorter term, or grey. Let's put it back on the daily. So we're looking for a break there, really, which could take us all the way down here if the market so chooses. So possibly a good example of a let me pop it on the 4-hourly chart. You can see that move since that data came out is really not particularly good. So yeah, that's looking very interesting to the downside. Good stuff, guys. I love it when you participate. It's fantastic. It makes it a much better session and gives me some interesting things to have a look at as well. Okay, guys. Well, look, I hope that's been useful. We've probably done our time now. Thank you once again for rocking along today. It's always appreciated. Always great to see you here. Inner Circle tomorrow night. I'm changing it today. There's a couple of things I'm contemplating, but as a follow through in terms of last week we talked about an accumulation system. I thought we might make it a systems one, so we may do some stuff on adding and removing indicators from your trading system tomorrow. But I hope that's given you some food for thought. It's been great to have you along. Enjoy the rest of your day and trade safe as always. Just watch that RBA decision. They may see some market movements locally and in the AUD subsequent to that. And we'll see you again very soon. Have a good one. Bye-bye for now. Thanks, Wayne. Cheers, GG. Shane, you're very welcome, mate. You're welcome, Rachel. Cheers, Ross. Catch you later.